Hello, everyone, and welcome to Speedy Global News. I'm Keeter.
And I'm Polly. We're your hosts, bringing you the latest updates on business, technology, health, and inspirational success stories every day.
That's right, Polly. Our mission is simple. Keep you informed, inspired, and ahead of the curve with the stories that matter most in our fast-moving world.
And today, we have an absolutely fascinating business story that combines technology, bold decision-making, and one of the most dramatic corporate transformations in recent history.
We're talking about MicroStrategy, a company that went from near bankruptcy to holding over $76 billion worth of Bitcoin. But trust me, the journey to get there is unlike anything you've heard before.
So grab your coffee, settle in, and let's dive into this incredible story of failure, recovery, and revolutionary thinking.
Peter, most people today know MicroStrategy as that Bitcoin company, but they started as something completely different, didn't they?
Absolutely, Peter. MicroStrategy was founded way back in 1989 by Michael Saylor along with Sanju Bansal and Thomas Spar. They were actually pioneers in what we now call business intelligence, essentially helping companies make sense of their data.
Right, so we're talking about enterprise software, competing with giants like IBM, Oracle, and SAP. Not exactly the most exciting industry, but incredibly important for businesses.
Exactly. And for about a decade, they were doing pretty well in this space. But then came the late 1990s and the dot-com boom.
Oh boy, here we go. Michael Saylor and MicroStrategy rode that internet wave like they were surfing a tsunami, right?
That's a perfect analogy, Peter. By January 2000, MicroStrategy's stock had soared from $7 per share to an incredible $333 per share. Michael Saylor's paper wealth reached astronomical levels.
But, as we all know, what goes up during a bubble
Comes crashing down spectacularly. In March 2000, MicroStrategy had to announce accounting mistakes, and the stock plummeted 62% in a single day. Peter, we're talking about $6 billion of Saylor's wealth evaporating in just 6.5 hours of trading.
$6 billion in one day. To put that in perspective for our listeners, that's more than the GDP of some small countries. Just gone.
And it gets worse, Peter. The stock that was once worth over $300 dropped all the way down to about $3.50. The crash was so severe, it actually dragged the entire NASDAQ market down with it.
So here's Michael Saylor, who went from being worth billions on paper to seeing his company nearly destroyed. Most entrepreneurs would probably call it quits at that point.
But not Saylor. He spent the next 20 years slowly, methodically rebuilding MicroStrategy as a traditional business intelligence company. And this is where the story gets really interesting.
So, Polly, fast forward to 2020. MicroStrategy has recovered somewhat, but they're still just a regular enterprise software company. What changed?
Well, Peter, this is where Michael Saylor's story takes one of the most dramatic turns in corporate history. In August 2020, completely out of nowhere, MicroStrategy announced they were buying $250 million worth of Bitcoin.
Wait. A business intelligence software company suddenly decides to buy Bitcoin? That must have shocked Wall Street.
Shocked is an understatement, Peter. MicroStrategy became the very first major U.S. public company to adopt Bitcoin as their primary treasury reserve asset. Not a small experiment, their primary reserve asset.
That's like a restaurant chain deciding to become a real estate company overnight. What was Saylor's reasoning?
His thesis was actually quite sophisticated, Peter. Saylor believed that traditional cash was being devalued by inflation, and that Bitcoin, with its capped supply of 21 million coins, would serve as a superior store of value and hedge against inflation.
So basically, he believed Bitcoin was the safest way to store value in the long run, like gold, but on the internet.
Exactly. But here's where it gets even more aggressive. They didn't stop at their existing cash. MicroStrategy started issuing convertible debt to raise more money specifically to buy more Bitcoin.
So they're borrowing money to buy Bitcoin? That's incredibly risky.
It was a massive bet, Peter. Their strategy involved using 20 to 30% leverage, essentially borrowing against their existing Bitcoin holdings to buy even more Bitcoin. It's like doubling down at a casino, but with a public company.
All right, Polly. So the big question everyone wants to know, how did this crazy Bitcoin strategy actually work out?
Well, Peter, the results have been absolutely wild. Michael Saylor's net worth surged from around $500 million to $10 billion at its peak between 2020 and 2024. That's a 20x increase.
20 times. So his Bitcoin bet essentially made him a decabillionaire?
It did. But here's the thing about Bitcoin. It's incredibly volatile. When Bitcoin prices crashed in 2022, MicroStrategy became one of the worst performing large-cap stocks. The company's value now swings directly with Bitcoin.
So they're essentially riding the Bitcoin roller coaster.
Exactly. Think of it like riding a roller coaster. Thrilling, but sometimes terrifying. When Bitcoin goes up, MicroStrategy's value skyrockets. But when Bitcoin crashes, their stock plunges too.
Peter, what I find most interesting is how MicroStrategy's bold move influenced other major corporations.
Right. They essentially opened the floodgates for corporate Bitcoin adoption, didn't they?
Exactly. And it didn't stop there. Other major public companies jumped in too. Marathon Digital with nearly 50,000 Bitcoin, 21 Capital with over 43,000, Trump Media and Technology Group with about 19,000, and mining giants like Riot Platforms and Galaxy Digital, each holding tens of thousands of coins.
So MicroStrategy may be the king of corporate Bitcoin, but they've inspired an entire wave of companies treating Bitcoin as a serious asset.
Absolutely. Today, public companies collectively hold over 4.7% of Bitcoin's total supply of 21 million coins. That's a direct result of the path MicroStrategy pioneered.
But there's also a lesson about risk, isn't there? MicroStrategy's strategy has created enormous wealth, but it's also made the company extremely volatile. Their fate is now tied to Bitcoin's performance.
Absolutely, Peter. MicroStrategy has essentially become a hybrid entity, part technology company, part crypto hedge fund. Tremendous opportunities, but also tremendous risks. And for our listeners, the lesson is this. Whether you agree with Bitcoin or not, this story proves that bold, unconventional ideas can change a company's destiny.
So there you have it, folks, the incredible story of MicroStrategy's transformation from dot-com darling to spectacular crash to Bitcoin empire.
It's a story that encompasses failure, perseverance, bold vision, and massive risk-taking. Whether you love or hate their Bitcoin strategy, you have to admire the audacity of the decision.
And Michael Saylor's journey reminds us that sometimes the biggest successes come from making decisions that seem absolutely crazy at the time.
But here's what we'd love to know from you. Do you think Saylor is a visionary genius, or is MicroStrategy just gambling with Bitcoin? Share your thoughts in the comments or reviews.
And if you enjoyed today's story, please subscribe, leave us a review, and share this episode with friends who love learning about bold business moves and corporate transformations.
Until tomorrow, stay curious, stay informed,
And keep dreaming big. I'm Polly.
and I'm Peter. Thanks for listening to Speedy Global News.